Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Well, Yatin, the terrific rally that we saw on Tuesday, kind of fizzled out today. In fact, we slipped below that 23,700 mark as well. But important to note that we crossed the 23,790 resistance zone today itself. We, we briefly reclaimed that 23,800 mark. But, some bit of caution kicking in ahead of the RBI policy as well, which is, of course, the MPC meet has started today. And the outcome will be known only on Friday. So ahead of that, some bit of caution. But the good thing is that the broader end of the markets has outperformed today. Last few days, the broader end of the markets had taken a back seat, and it was the headline indices that were grabbing the headlines. But today, some bit of relief in terms of portfolios, right? Because broader end of the markets held firm. In fact, the Nifty small cap index gained nearly 2% in today's session. Advanced decline ratio was a good 3:1 on the NSE. Looking at the global setup, Yatin, although with tariff wars kind of cooling a bit, there was some bit of relief as well when it comes to global markets. But yesterday, Alphabet reported, weak set of numbers, because of which, we saw the stock plummeting somewhere around 8 to 9% in after-hour trading. And right now, if you look at US futures, the Nasdaq futures are down almost 1% or so. So some bit of caution when it comes to earnings, which is why the global setup is looking a little skittish right now, which is maybe one of the reasons why our headline indices also gave up some of the gains. But in terms of sectors, Yatin, banks were doing well today, right? Nifty bank index had already clocked in that 50,000 mark, but today, it came very close to 50,500 as well. So doing well, banks, even PSU banks for that matter, and metals. Cooling trade wars, some bit of relief there, although, tariff has been levied on China and the Chinese market reopened after a long holiday today and they were trading in the red. But metals as a pocket, did well today. They were shining in today's session as well. FMCG, this index has been on the back foot for the last 3 days, Yatin. All the budget boost that we saw on the 1st of Feb, kind of has been cooling off. And, we saw some of the top laggards on the index, in fact, are from this basket. And realty as well as a basket was down today on shaky ground today, almost 2% cut on the Nifty Realty Index, which also dragged down players like Godrej Properties, which by the way reported good set of numbers. But let's quickly take a look at some of the movers and shakers today then. Among gainers, you had ONGC, that was the top Nifty gainer. Hindalco, Apollo Hospital, even BPCL was doing well. There's a Goldman Sachs upgrade on OMCs. So BPCL among gainers, Adani Ports are the one, Coal India, and even those, capex names, defense names that got badgered on budget day, they have been showing good traction in the last couple of sessions. So BEL continues to gain. On the losing end, Asian Paints, concerns there post third quarter earnings. Titan as well, one-offs have impacted numbers, and second top gainer on the index, Nestle, Britannia, HUL, Tata Consumer, all these consumption names were under pressure. SBI ahead of numbers, among laggards, and so was L&T. But Yatin, capital market, that was the theme in today's session.
Yes, stocks like CAMS, CDSL, BSC, Motilal Oswal, Angel One, all of those doing well in trade. In fact, the overall capital market basket, which was probably hammered in the last 5-10 trading sessions, saw some good rebound. Apart from that, we had stocks like Jubilant Pharma, Eris Life Sciences doing well. In general, it was a good day for pharma, with Eris Life Sciences clearly being one of the top gainers of the Nifty 500, 13% higher, and good guidance after the numbers yesterday. What was not doing well is the real estate pack, wherein Sobha Developers, that shares saw some selling, almost 5% down for that one. Phoenix Limited also down 4%. Also, stocks like Fine Organics and Thermax post numbers have been looking quite weak. In the FNO space, we have stocks like Kalyan Jewellers, which has seen a smart recovery in trade. 570 rupees for that stock with a turnover of nearly 3,000 crores. HDFC Bank continues to do well, almost 1.5% higher for that stock. Given that we have the RBI policy and private sector banks are doing well. Stocks which are at 52-week highs, the likes of Laurus Laboratories, stock was up 3%, UPL 1.5% higher, Muthoot Finance, JK Cement, Bajaj Finance, all of these stocks are clearly doing well in trade and hitting fresh 52-week highs.
All right, those are some of the movers and shakers. Stocks hitting fresh 52-week highs, and of course, as Yatin mentioned, capital market, that theme was doing well. But let's take a look at some of the stocks that are on our radar. Starting with Asian Paints, although margins were a beat, even volume expectations are fairly subdued. So the company has topped estimates on that front as well, with a volume growth of 1.6% or thereabouts. But there have been further EPS cuts, when you look at the street verdict, and because of that, the stock was the top Nifty laggard today. In fact, the company management was on CNBC TV 18 as well, and he mentioned that the weak festive demand as well as slowdown in urban consumption has impacted numbers. In fact, they haven't seen any pickup in the fourth quarter as well. So a couple of more quarters of subdued volume growth can be expected, and that didn't really bode well with the street. And of course, the company has also noted that competitive intensity post the entry of Birla Opus has only intensified, and over the last 9 months, competition has been heightened, and it is likely to continue going forward as well. Post the budget with the announcement of income tax cuts under the new regime, there was a lot of fervor when it comes to consumption names, right? And there are hopes that more money will flow into consumption, and as people look for more home upgrades, even paint companies will benefit. But there are quite a few factors at play, right? Input costs that will remain volatile, even the competition landscape that will remain intense, and these factors will continue to weigh. Some analysts I had spoken to, and they had said that although paints will also benefit from increased consumption, but these moving parts will also impact paint companies. But post the numbers, what the brokerages have done is that they have cut EPS estimates because they have factored in the fact that there will be a couple of more of muted volume growth for the company going forward. If you look at Jefferies, they have maintained their underperform rating and the target price is at 2,000 rupees. They have taken note of the management commentary, wherein, of course, as I mentioned, the management has highlighted tough demand conditions, and although demand will improve, it could happen only in a gradual manner. And also the company saw less than 2% volume growth in the decorative business in India. Fourth quarter also likely to remain under pressure according to Jefferies. But the good part is that EBITDA margin, on that front, the company had beaten estimates, right? And that is expected to stay around that 18 to 20% mark in the medium term. EPS estimate has been cut by 4 to 8% by Jefferies. Goldman Sachs has also come out with a sell rating. Target is at 2275. They've said that increase in staff costs have also had an impact on margins, and the deteriorating mix that has been one of the reasons because of the revenue decline as well. And they have lowered the FY25, FY26 and FY27 EPS estimates by a similar quantum, 4 to 5%. On the other hand, you have Morgan Stanley. They have an underweight rating. Target price is a little higher, 2,358, and they are saying that management is also cautiously optimistic on the near-term demand recovery, but margins, although are better, the focus will of course be on the volume growth trajectory. But as Macquarie, I want to highlight, they have an outperform rating on the stock, and the target price is at 2650, and they have taken note of the fact that the company has reiterated 18 to 20% EBITDA margin, which bodes well with Macquarie, I think, which is why they have an outperform call on the stock. But they have also said that clarity on growth remains key for performance going forward, as and how the competition landscape really evolves. We'll see what kind of an impact Asian Paints feels going forward in the coming quarters. But the stock, Yatin, is down 30% from its 52-week high, and half of the analysts who are covering the stock have a bearish or sell rating on the stock.
Absolutely, and the reason why the stock is at 52-week low is that the market already knows that the competition is increasing, be it Birla Opus or be it JSW Paints. And in general, the margin trajectory is also slightly weaker, given the fact that pricing power is now limited with the competition coming in. But moving from Asian Paints to IGL, and this is one stock which is moved on the day of Delhi elections. Hopefully, there has been a talk in the analyst community that now the gas prices in Delhi will start, to go up, because IGL was one company which did not take a price hike. Obviously, elections could be one reason. But CLSA has an outperformer call on IGL with a target of 220. The brokerage believes that the CNG prices in Delhi has not been increased by a period of nearly 3 months. And if you look at MGL, Godrej Gas and other peers, they have increased the CNG prices by 2 to 4%. After Delhi elections, CLSA believes that the company will be in a position to hike prices anywhere between 4 to 5%. And moving forward, the CNG demand should have a positive impact on overall volumes. Obviously, the preference of electric vehicles, especially by the government there, could have an impact on the CNG volumes per se. But overall, given the fact that household demand remains strong, overall industrial demand remains good, probably that could augur well for the stock of IGL. IGL clearly outperforming in trade today, Nandita.
That's true, Yatin. Stock was up 5% or so, but good to note that most of these CGD companies have recovered quite significantly from November lows,
yes.
right? Almost 30%. Because, of course, there was a 40% cut in APM gas, and the government has restored some of them recently, so that also bodes well. So, yes, I mean, after the kind of correction that these stocks have seen, a lot of analysts believe that the risk reward may be a little more favorable right now. But on that note, the other stock that's on my list is from the real estate pack. Shaky wicket today for some of these realty names, including Godrej Properties reported good set of numbers, Yatin, and yesterday it was upbeat, 3.5%. But today the stock was down 3%, amid profit taking, if I may say so. But the commentary coming in from the management has also been fairly good, wherein they have said that they are confident of meeting their FY25 sales guidance of 27,000 crore rupees or thereabouts. Quickly taking you through the numbers, Yatin. Third quarter profits saw multi-fold jump on a YY basis. It achieved record-breaking pre-sales of 28,800 crore rupees in calendar year 24. It has, of course, going by that, secured the top position amongst its peers. And it was the sixth straight quarter in which the company has delivered more than 5,000 crore rupee of booking value. Now, the company launched 7 projects across 4 cities in the third quarter, and inventory to be launched in Q4 now stands at 6,400 crore rupees. And the upcoming launches are expected in cities like Hyderabad, Noida, Gurgaon, the MMR region, Pune, as well as Indore. Now, the company has also raised 6,000 crore rupees via QIP in the third quarter. That was the largest QIP raised by any realty company, and they used some of that proceeds to retire debt. Yeah. So, on debt front also, debt to equity ratio has come down quite significantly on a quarter basis, and the rest of the proceeds will be used for business development. And on that front, business development front, it has already met its guidance, Yatin. Going forward, of course, the company has said that Bengaluru will remain its key market, because in 9 months FY25, the company has witnessed 2x sales growth of FY24. So yes, in terms of launch pipeline, things look pretty exciting. Now let's see what brokerages are saying. Morgan Stanley has maintained an overweight call. They've taken note of the fact that the company has been showing resilience in pre-sales performance, and they've said that the 9-month FY25 sales have already reached 71% of the full year guidance. HSBC on the other hand has a buy rating. Target price is at 3,700, and they've also said that the company is on track to meet their FY25 sales guidance, and it's also poised to benefit from higher bookings, stronger margins, and future project completions will also be able to boost profitability for Godrej Properties. Lastly, Motilal Oswal, they have also maintained a buy rating, and the target price is at 3,435, which implies a 44% upside from yesterday's close price. And they've said that the company has surpassed FY25 business development guidance by 17%, and pre-sales and cash flows in the first 9 months of FY25 has been fairly robust. Sales booked in the last 2 years with better margins and outright ownership will be recognized only post FY26 and FY27, which means it will provide a boost to its earnings as well. And according to Motilal Oswal, strong launch pipeline and healthy realizations position Godrej Property for sustained growth going forward. Looking at Godrej Properties, so far in 2025, we've seen real estate stocks come under fair bit of selling pressure. Yeah. So, stock performance on a YTD basis is not all that great, 16% down. But given the fact that earnings have been good and it has managed to beat its peers as well, so things may really pick up going forward in terms of earnings and both in stock prices as well.
Absolutely, and I think post numbers yesterday stock did well. Today also morning we saw some good move, but I think the entire real estate sector saw some bit of profit taking at high levels, taking the stock lower, almost closing at the day's low, 4% lower.
All right, that was about Godrej Properties, and those were all the stocks on our radar today. But Yatin, tomorrow we have SBI reporting numbers, the big one, the big PSU bank, earnings. So we'll be watching out for that, and of course, the rest of the week will turn out to be quite exciting, given the fact we also have RBI policy on Friday, and it is expected to be the first rate cut in 5 years since the pandemic. So, and yes, we also have a new governor at the helm, right? Correct. So, it is going to be an action-packed rest of the week for us as well. But with that, we have come to the end of this edition of Closing Bell. I would like to thank you for watching us. Of course, stay tuned to Money Control for all your other news and updates, and have a great evening.